Okay, hello, and welcome again to this segment of price ladder absorption and reloading. We're actually just continuing off the last video where we went through identifying order absorption levels and areas in the short term or the short time frame. And in this part, we're actually going to go through identifying it in the longer term time frame. So specifically, I mean, if you wanted to identify absorption levels slash areas, i- we're more looking towards areas now in the longer term. The most important thing to understand is that the longer time frame participants, they don't act off of just single levels. They tend to interact with the market and do their business over larger areas. So for example, if I just pulled up a quick chart for you, if I were to tell you, just take a look at this chart and tell me what the trend is on this chart, you'd probably firmly say it is to the downside. You tell me, okay, well, the way I see this market at the minute, we're making lower lows, lower highs, and we're trending to the downside. It just seems that way. Obviously, if we take that, if I actually told you what the time frame is for this, it's actually a 1 minute chart. It really doesn't make that much of a difference for the longer time frame participant. If he looks at the larger time frame, which if we take a look at um, on the dailies, you could see very, very clearly it's been in a long-term uptrend. In fact, what we just saw now was just a small segment from from that day here, that little downtrend in here. So really, it's all relative. Where the long term and where the short term and the long term coexist is the market, obviously, but the longer term see things obviously a lot differently to the shorter time frame. So where can we potentially look to see where the longer time frame participants are interacting? Well, it's important to understand how the longer time frame participants actually do their business, and how it affects the market structure. So usually longer time frame participants tend to accumulate and distribute their positions. So they don't tend to do it over a level, but over an area, like we said before. So if we take, for example, a market um, that has this sort of market structure, so it's doing this, then it pops up, and it does this for a while, and it pops up like this for a while, does a bit of that, and then potentially moves lower. Now, taking a look at this structure as it is right now, um, these areas are the areas where you need to be focused on. So this area in here is what we call the accumulation. So this is the accumulation zone. And the buyers, their mandate, so basically a fund will tell the trader on the desk, I want to buy over this 30 tick range. It's not necessarily 30 ticks, but if it's, let's say, they're buying bonds, uh, make sure you buy over this 10 basis point range, or buy around the VWAP, or execute around whatever it may be. Their strategy will be to get their position filled with the least amount of impact on the market. So they'll be looking to accumulate in a certain area. And if you can identify those areas, that's where the market potentially starts its trend. So once that has been exhausted, once all the selling into this area, so if we have potential sellers, so if there's at all these points sellers here, and in every one of these points, the the big time frame buyer is sitting there absorbing in this area. He'll let it rise up. He'll let the market he'll let the market sort of rise up, rise up, rise up, and every time it comes back to him, he's absorbing this position. As soon as we break out from this area, um, everyone that's been selling in this area needs to now cover, and the market continues its trend. So really, the whole point of identifying these accumulation areas is identifying where the smart money is actually building their positions for the potential trend. These are the institutions that are most probably, in most cases, actually moving the market in a certain direction, creating trends. So as soon as the market actually gets into an area where the fund manager says, okay, this is my target. So if this zone in here is the entry, he would say around this area in here and maybe around this area in here. So we've got, let's say, potentially target 1 and target 2. So around this target area 1, the market will get into an area where this buyer has now turned into a net seller. Not net seller, but in the short term, selling some of his position. He's what we call scaling. So he's selling the position here, selling the position here, selling the position here, and then effectively at the top of the trend where he's effectively reached his target, and it's target 2 here, he's basically offloading his position. This is where, he'll be stepping into the market, and at this region in here, not necessarily always the top, it's probably this whole region where he's active, but at the top here is usually where we find someone absorbing on the offer. And likewise, like we said before, in this area is where we're seeing absorbing on the bid. So if you understand this simple dynamic, the fact that the market, and this, we forgot to mention, this is our accumulation zone, this is our distribution zone. So the fact that the market moves because of the larger time frame participant, if you understand how the larger time frame participant actually executes his orders, that gives you a huge advantage in trading the shorter time frame. So like we said, large time frame participants execute by accumulating and then distributing. So if you understand this concept right in here, you can find potential entry points where you could see the market accumulating position. Now, it doesn't necessarily mean it's this straightforward. What I've shown you is a very, very simplistic model for how the market potentially moves through this accumulation and distribution. It could be such that the market or that potentially big fund could be buying in this region and here, and then accumulating a little bit more of his position in here, and then effectively distributing. It doesn't necessarily mean has to be a target. This is just very arbitrary. Usually, if this is his entry and this is his ultimate target, he could actually be scaling in on the way up. So you could actually see accumulation zones even in here where you're seeing accumulation. But you see, usually the biggest institutions are at the bottom and the top. There's big institutions that are in the middle, and they'll usually be executing their orders mid-trend when they actually see a little bit more confirmation as well. So no matter what the situation is, identifying the time frame of what you're looking for in the ladder is very, very important. And what we'll go through in the next part is actually identifying what that looks like on the ladder for each case, for a very short time frame and a longer time frame. And we'll also look at potentially scalping and trend following and even contrarian opportunities. And within that, obviously, is that's where we're going to show you how the time frame actually plays its part. So stay tuned. Thank you for listening in, and we'll go through that in just a bit.